You're tuned in to the InsurTech Edge, where we delve into tomorrow's insurance tech landscape. From AI-driven innovations to groundbreaking strategies, let's hear from the leaders who are reshaping insurance globally.
So, welcome everyone to the InsurTech Edge podcast. Today, we have the pleasure of talking to Steve McKay, CEO and founder of Pouch Insurance. Can you let us know a little bit about what is Pouch?
Pouch, money in your pocket, is a small business commercial auto MGA. So think van sedans and pickup trucks, electricians, lawn and landscaping, pest control, that sort of thing. We're live in 7 states and growing fast.
Excellent. So, what inspired you to start Pouch Insurance? Like, how did you identify the need for innovation in the commercial and auto insurance market?
Well, it started with telematics. So I had a prior startup called Drive Factor, which was a telematics service provider for personal lines auto. Most of our clients were actually outside the US, and that had a successful exit in 2015. Round about 2020, enthusiasm for telematics was on a big resurgence. And so we ended up just talking to potential investors very early on who were really enthusiastic about a commercial auto product that had telematics at its core, but lots of other data was starting to become available on small businesses that hadn't been there before. So the sort of thing that was happening for consumers 25 years ago, suddenly there's tons of data on everybody and you can use that to predict lots of things. Wasn't around for small businesses, but then, close to 2020, the data vendors got around to the small business world. So if you think of telematics plus other stuff, how long have you been in business? How many employees do you have? What sort of storefront do you have? All that stuff's really valuable and very helpful. So the thought was we could put that data together in a way that improved pricing accuracy and at the same time didn't require people to answer a lot of questions. So there's also a need, we thought, because the process could be very manual and clunky. So we could have a really seamless process that ought to work better, telematics at the core. And that got enough people excited. We were able to put it together and get going.
So the logistics and telematics is something that I'm very curious about in Pouch use case because I had the opportunity once of building a telematics product for personal lines, and that was in the Dominican Republic, a completely different market where essentially there's no data, and everything has to be based on assumptions, triage, etc. What was your case in Pouch when selecting device? I mean, we're talking about a much more modern and standardized market, but was that also hard to pick?
So the device itself doesn't vary all that much from manufacturer to manufacturer. The greater considerations were data connectivity, strategic alignment with vendors, that sort of thing. And so right now we offer both a mobile app and a physical device. Great. Increasingly, our strategy had always been based on the assumption that in not too long, everyone would have their telematics data available from OEMs. And that certainly was the direction everything seemed to be going until last winter, when the New York Times ran some articles about GM's apparently unclear opt-in procedures and certain drivers being upset about that, which then was followed by some lawsuits, which was followed by vendors saying, "Oh no, wait, we're not providing this data from OEMs." So, still think that's kind of the way things are going, at least in the commercial market, because again, the privacy concerns shouldn't be the same, but it may take a while to get there. More broadly speaking, uh, we certainly are seeing, whether the OEMs and third-party aggregators go faster or slower, that more and more vehicles just have some sort of fleet management solution with telematics in it. And so our strategy involves making deals with the companies that are collecting that data already anyway.
Yeah, absolutely. So, do you believe that at some point regulation will come in place and make this a standard for manufacturers to actually have published certain data to insurance companies and other stakeholders in the industry?
I doubt it. I mean, there's been talk about that for a long time, but it's never been clear to me how that would help anyone. How does one company calculate hard brakes versus another one? Like, you can use a little bit of math to accommodate that. It's not a big issue. So I doubt there's going to be regulation outside of potential privacy regulation, which I expect would be mostly about disclosure and opting in.
Yeah, and there's a lot of talking around how the use of telematics would actually impact either your risk assessment and then having a better portfolio, or being able to determine claims in a more, I would say, seamless way, or having more data available to detect fraud or detect other uh, claims that otherwise shouldn't be paid. What has been your experience in Pouch so far with the usage of the telematics available?
Well, it does everything. And not just for us, but for anybody using telematics. So it's got some strong positive selection features at the front end. If you're planning to commit fraud, agreeing to be tracked is a terrible idea, so you don't get a lot of fraud. People tend to know whether they are careful drivers much better than you can get from any set of questions or available data. So the people who opt in know they're going to do well, and so they tend to uh, be low loss drivers to begin with. There's also tons of evidence, not just from us, but everybody else, that when people know they are being monitored, they become more mindful, and the mindfulness of the driving materially reduces their chance of having an accident. So you just take people who without telematics would have a certain expected loss and it just goes down.
And then what do we do with the data regarding our portfolio that shows us that, hey, we might have some very good drivers, but we might have some other ones that are not good, although they haven't crashed. But I do recall in this organization that I had the opportunity to work on a project where there was this tag kind of like about to crash. We knew that there was a certain segment that where the likelihood of having an accident was really high. And the question or the argument was always, should we not renew? Should we just like cancel those policies? Should we do something? Like, is that something that you're facing as well as a challenge?
Great. The question was sometimes will this turn people off of the program? Again, it doesn't because they think they're careful drivers. There's always a group of people who think they're good and they're not, and they're really bad. So you should raise their rates. It's fine. As a general rule, I think that has worked out well economically. Do the models, is the data so good that I can find some subsegment with such an astronomical loss ratio that I might as, or predicted loss ratio, that I might as well cancel them? Right? It's a 12 factor, so I can say, okay, instead of $2,000 a year, it's 24,000 for you, so it's tantamount to canceling them. No, data works great, works better than anything else. Now, there's another way to think about that, of course. I remember having a long conversation with a senior executive at Geico about this. He's no longer there, but it was really intriguing. And that is, could you build a time series analysis? That is, could you see that under some circumstances, you could understand how driving risk changed over time? And with someone trending up in such a way that you could say, that driver in particular is going to go into a mode where they're really likely to have an accident, in which case the intervention probably isn't canceling them. It's probably like calling them on the phone and saying, stop doing that, whatever that is. I've never seen any analysis to illuminate that. But like this guy and other people I've talked to, seems like probably, like that's probably something that could really work. But we'll see. Yeah, I think the data's there and I think it's possible. Haven't seen anything like that happen yet. Fingers crossed.
Of course, this makes us talk about the next steps with data and touch AI. And as we were discussing before, there's a lot of hype, a lot of noise on everyone's talking about AI. Everyone says that they're doing AI. Everyone wants to change the world with AI, but very few are actually applying it in very practical use cases that could actually yield and could be measurable. Like okay, I am using AI to automate this specific part, and that is yielding these returns. So where do you see AI come in handy in your business, in whatever part of the process, not necessarily just telematics?
So I think there are three areas. One of them is in interactions with humans, either policyholders or agents in particular, where there's a portion of the communication that actually can work quite well automated. Not the whole thing, but some portion of it, a bit like the initial data collection for stuff and then hand it over to a human. That seems to be improving very rapidly in a way that there are cost and efficiency savings. Then there are just intelligent automation of tasks that happen all the time that are data, purely data tasks, but they're repetitious. And so we've seen some traction there. And then, as it's been explained to me, we're investing heavily in a future where they're really, you don't do API integrations anymore. That is to say, we have AIs or AI bots, and they talk to other people's AIs or other institutions' AI. And so you train that your systems to be good at learning how to integrate with others.
There's like just so many cases where there's just a backlog and the company is super busy launching new products, so there's no one that can actually do this automation, and it just starts creating like a technical debt that never ends, right? So then when you start looking at it, well, it's not so complex, but it's very long, and having AI fixing these things that are not that seem even trivial or very basic but still need to be done seems to be like the place to start.
Yeah, my strong impression here, it's not that AI isn't really useful, but it doesn't feel to me like a radical departure from a myriad of incremental changes, continuous improvement that's been going on for decades. Storage is cheaper, searching is faster and better, processing speeds are improving, the ability to handle more and more data gets better. More and more code has just been written so it's easier to put things together than it used to be because you don't have to start everything from scratch. So automation, computing just keeps getting better. Like, it's not like we reached the end of it and said, shoot, now what do we do? Oh, maybe this AI thing will give us something to do next. It just keeps improving. And so, yeah, we can automate really, really fast and really, really intelligently. And you can call something AI or intelligent automation or something else. We're certainly in a world where investing in automation just keeps yielding really high returns. So we're just going to keep doing that. And yeah, some of the stuff we do we'll call AI. And if that gets everyone excited, that's cool. But if it just saves a lot of money or sells more business, that's fine too, right? A little bit of everything continues to get investment and improvement, and I think that will continue to make everything better.
So then moving towards Pouch's business model and differentiation, I think that it is really interesting that Pouch, unlike other of the digital MGAs that we've seen, has an approach that focuses a lot in the producer. Would you say that Pouch is actually building an ecosystem for the producer, or the intention was actually to go more like on a direct manner? Both. What's your take on that?
Well, I think alluding to your comment before, we didn't have some passionate emotional or investment or faith in some strategy like it's got to be all digital or it has to be uh, all agents or something else. It's more a matter of we're going to build efficiency around wherever the market is. We've invested a lot and continue to invest in smooth operating with independent agents. That's because independent agents drive a great big portion of the market that is not particularly connected or digitally oriented. And then speaking of AI is really good at doing things in multiple languages. Great. Helps us to serve that group. It's not to say that we do not also do some digital advertising and doing other things directly. Our finding is that the size of the profitable market there is limited. Okay, if that changes and it gets much bigger, then we'll be there for that. Which does not mean we would abandon what else we're doing. We would just do the other thing too. So yeah, we've been able to hedge our bets there in going where we see the opportunity. Same things happens with affinity sorts of deals that we're working on, and some of which will be announced soon. whatever works, in a sense.
Excellent. So would you say that producers that work with Pouch, they love working with Pouch? Why? Like, what would be the main driver if you were a producer and you pick Pouch?
So my understanding is, from what we hear, we're easier to work with. In particular, the quote is fast and easy. Sort of click, click, click. And it goes back to the strategy of building your price or your product primarily around data you get from third parties. Then I don't have to ask you a lot of questions. It's built recently, so systems are relatively technologically advanced, reasonably easy to use. We're certainly not asking anyone to scan something and email a PDF. And so that seems to work well, and we keep investing in making that better and better. That's important. And in the future, we plan to launch additional products that will help to serve producers by giving them stuff that they're having trouble getting from other insurers, and hopefully that'll work out well too.
Totally, yeah. Making their lives easier. There's like so much paperwork involved in the life of an independent agent that whomever gives them the the most, I said, like seamless path, and consistent, because a lot of the times they're complaining about the rapid changes, but more than rapid changes in technology is just like procedural changes, like, oh, now you have to come here to this system, now you have to go and do this thing when you want to get appointed, now you have to do this other thing. So it reminds me of a conversation that we had with a company that had launched a direct to consumer life insurance product, and they showed how innovative this new digital approach was towards their insureds, where they would have all these self-servicing tools available to them. And someone asked, well, it's actually harder than what it was before. And it was an insured. They were like, why? Like, well, before I would just like get on my phone, call my agent or call the insurance company and say what I need, and they will take care of that. Now you're actually sending all that paperwork in a digital form to me, but you're asking me to spend 20 to 30 minutes of my time doing something that previously someone else was doing. So there's like that balance there that sometimes we tend to think, or consider that by making something digital, it just makes it better, and perhaps not so much. So I think that it's a great thermometer that, as you're saying, like if producers are finding it easier to work with Pouch, then there's definitely something of value there.
Yeah, it's remarkable how many processes are in place with other insurers that we've talked to. We have to fight this tendency constantly. The tendency to say, well, there's something we're legitimately worried about and we don't know what to do, so let's just do a lot of things. We're going to ask a lot of questions and create a lot of procedures. We don't have any evidence that any of it works, but it'll make us feel better that we're doing something. It's the industry to some extent. And so it's the sort of thing that is not like you build it and then it's good. It requires constant vetting and changing, and acknowledging that sometimes you do have to ask another question or you do have to do something else because things change or you discover something. So it's a tricky core competency to develop, and something that I think gets more valuable over time because it's just not the sort of thing you can do simply or easily. You don't just sort of say, we're going to make this simple. Requires a lot of sweating details to get to that.
Yeah, I agree. And also, we're in an industry that by nature is risk averse. So having an organization rethink about its processes and about the actual the actual existence of those processes, because at some point, you see organizations that have gone through a digital transformation process, and yeah, you end up with some very fancy technology and digital processes that perhaps, as you mentioned, many of them should not even exist. Um, but making that change and making that suggestion, like, hey, this thing that you have been doing for 50 years uh, is not is no longer needed. Uh, it's a tough sale, and I would say sometimes this is one of those initiatives that it could get an executive fired, and if it works well, they'll just get a pat on the shoulder. So that increases that tendency of being more risk averse about it and just having it the same way as it has been done forever. So then,
Yeah, I was going to say it's also a terrible increased risk with intelligent automation and AI because to some extent you solve this problem by being data driven. You sort of look what works and what doesn't, and the data will tell you, right? The data will tell us here's how much effort we should put into digital advertising versus going with human producers. Great. Uh, if you the more things are automated, the more the AI in particular, you don't see any of the interim steps, right? You just tell the application, do this, and then come up with something that solves this problem. And then it says, how about that? But the whole value of it is its ability to iterate through bazillions of alternatives before it comes up with something. But you don't see any of that stuff in the middle. And this makes it harder to evaluate the process or find something that gives you a greater understanding of it's working. It's not all. Everything is reduced form, and you lose the value of having equations that are sort of more structural. Which is not to say you don't do the AI stuff. It's just that you need to do it manually too. Right? You need to be gathering data and looking at it as a human in addition to make sure you understand why things work the way they do. And when you get AI sort of driven results, why is it that? Right? What was the computer thinking in a sense?
yeah, absolutely. You can't forget or take out the sheer amount of business acumen and insurance expertise it's required to run a company like this. When we forget about that and it goes into the kind of like just techie kind of a Silicon Valley type of approach, then dangerous things start to happen. Most importantly, a lot of money gets lost. So it's that's really key. Like proper actuarials, proper, and that was going to be my next question. How do you see the trends shaping the future, and where Pouch is getting aligned with, in terms of uh, the innovation that's coming up in this space? We discussed a little bit about AI, but what about the roles and the talent that is required to run a company like this now and in the future?
So I think the future pressures are going to be on still increased speed, seamlessness, ease, automation, and that requires deep, detailed understanding of all the steps in the processes. People who sort of really understand all of the building blocks, so they understand the mechanisms for making things work correctly and faster. It's a bit like you're going to use more and more AI type stuff. You got to be better and better at telling the AI what to do, right? Better and better at asking questions and asking the questions that are useful questions asked in the right way. So people who really understand the nitty gritty of the ops, of the pricing, of the statistics, that'll be really, really important. And the second thing is this is very hard to predict. So again, I think we have to be in hedge our bets mode. How will distribution change? I don't again mean some sort of false battle over is it digital advertising or is it human producers. You're always going to have some sort of mix of those two, but the way that it happens and the parties that are involved get trickier and trickier.
Excellent. I we got a question actually before the podcast related to what do you think is going to happen with cars, like self-drivable cars, and especially like commercial fleets? This is something that might be either right around the corner, but you don't know, perhaps with regulation it's going to take some more years. But at some point, these cars are going to hit the road. They are already some on the road. Um, what do you think the insurance industry is thinking about? Who's insuring those vehicles? Who's the insured? Who's the driver?
That's an imaginary situation. There's this whole spectrum in between, like there's nobody in the car and it's just a manufactured thing, over to I've got adaptive cruise control. So today, nobody's in the car, products liability. I have adaptive cruise control. There's no product liability. It's me. It's just old-fashioned insurance. And then there's all this stuff in between where there's a human involved, but there's more automation than before. And the degree of automation is fluctuating throughout the ride. You could imagine you drive for Lyft, and when I'm on driving for Lyft, I'm using more automated features, but when I'm not, I'm using fewer. And so that's going to be a big mess. And it will be something that we want to be part of addressing by making sure we have lots of data.
So Pouch started in 2020, and around that time, like between 2018 2020, there was a hype in InsurTech. There was this first big wave, and now we have a lot of those companies that started back in the day that have disappeared or have merged, but we see a much more mature InsurTech scenario worldwide, actually. What would be your advice to other InsurTech peers that are there, that are perhaps even younger, um, to thrive as Pouch has been doing?
So you need to know, you need to be insurance people first. And goes along with that a sort of East Coast business model, which means you know how to make money and you're going to be profitable as quickly as humanly possible. Right? That just becomes a core value. So those two things, I think, are the most important. It sets up a challenge that's really, really hard, but it's unavoidable. And that is, you need people who understand insurance, who are also entrepreneurial. And the thing is, the only way to really learn about insurance is to work for a big company, by and large.
Completely agree. And as we see, innovation in the insurance space is moving fast. However, this does not mean that we can forget our roots in insurance, especially, and also what any kind of company should do, which is, at the end of the day, a company exists to make money, to make some money to shareholders. So with that, we're getting to the end of our podcast. And as we wrap up this episode, Steve, I want to thank you so much for your time. I think it's been very valuable to have this conversation with you. And to everyone else who's listening, I invite you to subscribe. And is there anything else you'd like to add?
I don't think so. Thanks very much, Camilo. Always informative and entertaining to talk to you.
Likewise. Thanks a lot. Bye-bye.
Thank you for joining us on another episode of the InsurTech Edge. If you enjoyed today's discussion, don't forget to subscribe and give us a 5-star rating. Stay tuned for more exciting episodes coming your way. See you next time.